Going gets tough. Opportunity to sell on the rise. In the last week's market view, we had forecasted a possibility of Nifty meeting the selling pressure at higher levels. The levels highlighted were 17,500 to 17,600 for possible selling opportunity. Nifty edged up in the initial part of the week to fill the gap and made a high of 17,529 and fell down in line with the expectation. However, we had also mentioned about a possible buying opportunity at 17,200 to 17,000 levels. Because of the sideways range, the level was broken on 15th of March 2023 and the selling pressure aggravated as we broke that level. Some respite for the bulls, however, is the fact that 17,000 is still being held on the weekly closing basis. This should give some scope for recovery in the upcoming weeks. However, there are a few things that makes us feel that this would only be a pause in the ongoing selling and there is still some way to go down before we show signs of medium-term reversal. Point number 1. Nifty has broken below 200 DMA on 13th of March 2023. As we are talking, this 200 DMA stands at 17,450 levels. On the way up, this will act as a strong resistance. This means on rally that we see will be met by strong resistance around 17,450 to 17,500 levels. Point number 2. On weekly chart, Nifty has now tested the support of 17,400 multiple times. The more number of times that level is tested with lower highs, there is a high probability of it being broken. Point number 3. The daily RSI has slipped below 40 points and stands at 37 and the weekly RSI is at 40.8. 40 is considered to be a strong support for RSI and a move below it signifies weakness on daily time frame. Let's refer to this image representing the Nifty chart and the 200 DMA. Let's also refer to the Nifty chart showing weekly lower highs and lower lows. To summarize what we have covered so far, Nifty does not seem to have enough strength to rally sustainably. Any move in the market will be met by selling pressure at higher levels of 17,400 to 17,500. Bears can surely watch out for this, as close above this level would mean bearish momentum reversing. The odds of that happening, however, are extremely low in the immediate next week. On the downside, 16,700 to 16,800 would act as a support. Interestingly, Nifty Bank Index is slightly more positive with a long lower wick candle. It has closed above the prior day's high and also seen defending its 200 DMA. Unlike Nifty, there is a possibility of select banking sectors, select banking stocks remaining strong in the early part of the week. However, as the overall trend is down, it too will meet with selling pressure at higher levels. Now let's take a look at some stocks to watch out for. Whirlpool and Godrej Consumer Products, also called Godrej CP, are expected to trade with a very positive bias. Both have shown good action in derivatives and are looking strong on the charts for a decent up move in the short term. Thanks for now. We'll see you again next week with a fresh video and update. If you like today's video, don't forget to like and share the video with your friends and family. Make sure you click on the subscribe button and hit the bell icon to get an instant notification when we upload the new video in the future.